Hello everyone and welcome to our today's webinar. The topic of today is very important to the works of any AML specialists or financial company. My name is Ilmar and I'm your host for today's session, and we're going to discuss keys to effective AML compliance as well as challenges in assessing risk levels. Measuring the AML risk levels using tools like watchlist screening products is quite challenging. The complex nature of regulations, sometimes disconnected from practical realities, not only endanger the risk assessment methods of financial institutions, but also affect how verification tools measure risks. Screening tools often face challenges like false positives, false negatives, and potential biases in data. Therefore, today, with our experienced speakers, we will delve into the complexities of anti-money laundering screening tools and risk assessment challenges. We will learn how risk scores are usually measured by banking industry and compliance industry, and how companies decide if a certain screening tools is a good fit for their compliance procedures. So, Chris and Victor, thank you very much for coming today. And let us give a brief introduction of yourself. So, Victor, you can start first.
Yeah, hi. My name is Viktor Tkachenko, and I'm leading AML and security department in Citadel Bank Estonian branch. My experience fighting against financial crime is coming from 2010 when I worked for law enforcement agency and afterwards in different banks in AML and KYC. I'm also ACAMS certified AML specialist. Thank you.
Thank you, Victor. Thanks for joining us today. And Chris?
Hi everyone, my name is Chris Foyce. I work for LexisNexis Risk Solutions. I'm a market planning director, so focused on strategy, particular focus on our platforms and a proposition called Risk Narrative, which we've rolled out globally. That's an end-to-end onboarding platform, which I think is quite relevant to the topic we're discussing today. I've probably worked in the vendor space, focused on financial crime compliance for over 10 years, providing various solutions to institutions in different regions around the world.
Thank you. Thank you very much, Chris. So let us start with some questions more or less related to particularly AML screening tools. So, Chris, should AML screening tools help with only name screening against, let's say, politically exposed persons, sanctions, and adverse media watch lists? Or should they also help assess corresponding risk levels, some kind of automation?
Yeah, so I mean, if we just think about the purpose of name screening, it is to identify potential risks, whether it's a sanctioned individual or a PEP that you may need to do additional investigation on, understand source of wealth, etc., or an adverse media hit. So the whole, I mean, we call that data set like a database of heightened risk individuals and entities. So that's the point of that. So it should definitely input into a risk scoring methodology, and depending on the types of matches you get, determines what type of risk score potentially you will have. However, I like to take a step back. I think you need to look at it in the broader context as we're talking around kind of risk scoring. So I would say name screening against sanctions, PEPs, adverse media enforcement is a critical component, but it also needs to be looked in the context of other things that organizations are doing during the onboarding process, whether that's identity verification. Can you verify that individual, or document authentication? Is that a genuine document, identity document you're looking at? And obviously as well, transaction monitoring as well is a key thing, because that has the potential to have a dynamic impact on a risk rating within an organization, depending on how that individual business is actually transacting. So I think it needs to be looked in the broader context. But to answer your question, yes, it definitely informs risk levels. Some of them in the extreme scenario, it's a sanctioned entity. There's distinct measures that you would need to take in that scenario.
Okay, thank you for your answer. So as we see, it's quite a complex approach, probably even involving more than one softwares or screening tools. So Victor, should banks rely on AML tools only for name screening or also for assessment of risk levels and something else as well?
let's make it clear from the very beginning that we'll speak about screening and monitoring tools separately. Let's also divide monitoring tools into two parts of online and post-monitoring, as screening works in real-time mode and stop transaction. The similar approach is used in online monitoring process. Usually the different sides behind the logics. Screening is done against, as Crystal said, the sanctions list and also there's media articles, but online monitoring is based on the customer's transactional behavior, where the risk appetite of the particular financial institutions plays a demanding role. It means that transaction could be stopped related to the client, the geographical and product and services risk. But today, financial institutions have a long-standing dilemma of customer risk scoring based on the process which I described previously. So, should the customer risk scoring be automated based on the triggers which jumps up in the screening and monitoring processes, or each of those should be reviewed manually by AML analysts? And how the vendor or AML tool provider could help financial institutions to overcome those challenges? So those are the questions that financial institutions are facing today. And from the practice perspective, I see different approaches even amongst the Estonian market participants. But let's check it from, first of all, from the risk perspective and then from the resources. Is it appropriate to increase customer risk only based on the negative article? So probably not. But do we really know how the customer is connected to the article and which kind of risk does it pose for the financial institution? The customer name could only just be mentioned in a those area, but we don't really know is it our customer or not. So if you take Slavic name, it could be an exact match with the sanctioned person on the sanctions list. So from the efficiency point of view, increasing customer risk to the high is not appropriate only based on the trigger that we will have from the system. And there is a need to see the whole picture by sending it to the respective analyst who will do an investigation and additional analysis on that. And only based on this analysis, we can say that, okay, now the customer risk could be increased.
So there's lots of points there. We'll just get the discussion going. So I think the first one you talked around was transaction monitoring and can automation work there, because there's a number of different variables you touched on. So I suppose from a vendor perspective, what we're always relying on the organization on is the input, the quality of the input data. So depending on the source systems, how you're capturing that data. So sometimes we come across organizations where they have quite a complex risk rating methodology. And when we go to actually implement it, what we find out is the underlying data is either not there, or it's there, but it's maybe being entered in a free text manner. So it's not in a structured format. And obviously we need kind of structured data to drive a risk rating model. So generally our approach is, what's in the source systems, what data can be provided to inform that risk rating? And then it opens the door to the kind of the potential that you talk about, but I don't underestimate that it is complex. You also touched on another really interesting point, because you used an example of an adverse media article, which is really tough one, because in adverse media, they typically will not give you the exact date of birth. They will maybe say, here's an indication of age or something like that. And then maybe there's some kind of enforcement action that's being taken. That's why it's in the adverse media. I think the importance there is you using actually a curated data source that actually where there are researchers going across all those adverse media in multiple languages and trying to do lateral research to try and get as much secondary information as possible. Now, in not all cases is it possible to get all that information. And so the question is, it's better to include that article, so at least you're aware there's a potential risk. But ideally having a data source that does try and find that secondary information to furnish you with the information. And then you're completely right. There are always going to be scenarios where you're going to have to put it to an AML analyst. You need an expert to look at this, to assess the risk, and potentially use other sources to verify whether indeed it is the individual and that you need to take action.
So personal human. Sorry. Go ahead.
I just one of the talk that Chris told now. So you cannot take just one trigger to increase the customer risk, but you need to take all the aspects and, of course, those relevant sources to be analyzed, and only after that to assess the customer risk.
So personal human assessment and approach to the task is crucial, basically, among the risk appetite of the company and data quality. But let's go and dive a bit in regulations and different phenomena according to them. So how does the evolving regulatory landscape influence the assessment of risk levels in AML compliance? For example, recent regulation in UK requires treating domestic PEPs as low risk, for example, but some PEPs, like prime ministers, for example, are treated as high risk because of the higher power they wield. And I mean, there might be some other examples connected to regulation. So, Victor, have you encountered any similar paradoxes in your work, and what do you think of such cases?
The regulator landscape is always challenging for all the financial institutions, I believe, in all countries. And to assign the risk level of the customer based on it is pretty challenging. If you're talking about PEP status, then in my opinion, UK requirement treating domestic PEPs as low risk could be as a risk-based approach option. But we need also to consider other red flags, as we discussed it before, during onboarding, I mean, of such customer and during the business relationship with them. And one of the main source which could be used in analyzing inherent risk of PEPs is adverse media. Again, if the domestic PEP has a numerous amount of such kind of articles, can we still treat them as a low risk PEP, even if he or she is not the prime minister of the country? So I think we cannot. And probably another important thing is about the political influence and power positions. So, for example, some financial institutions treat CEOs of local or global corporations as PEPs, as they can influence political decisions. And PEP positions are also different from the political influence and power perspective. So, let's take an example. Prime Minister versus CEO of the company, which is owned by the state. So state-owned companies are again also different from the risk perspective, and you can also need to consider economical activity of the state-owned company. Let's take some examples. Energy, postal and logistic services, so like aviation or railroads, or gambling. So lottery is usually the Baltic states owned by the state. Or from another perspective, which might be a lower risk, certification centers, loan insurance, and etc. And also, we need to consider its geographical presence. Is it only local state-owned company or international one? And another government-owned entities are non-profit organizations and foundations. So how financial institutions should treat them? And as a result, financial institutions need to have strong understanding of inherent risk of this type of customers and build sufficient scoring systems.
So again, a lot to unpack there. So I think I don't want to pretend that we have the answer to all that complexity that Victor touched on, but I'll just give a few points there. One is, I think from a vendor perspective, it is around enabling organizations, providing organizations with the capability to reflect their risk appetite within the system. So that's the first point. In terms of the data, so again, it all comes down to the underlying data source there. So when you use your UK example, for instance, I think it's very important to have a database of sanctions, PEPs, adverse media that has granularity in terms of its structure, and that has categorization in terms of that structure as well. Because with granularity and categorization, it actually opens the door to you being able to reflect that if you decide to. If that was part of your risk-based approach, you could reflect that in terms of how you do the screening. So that's important. Victor also touched on SOEs and MSOEs, which is a complex area as well. So just identifying all of those kind of globally is a task in itself. So having that data source that is actively looking at state-owned entities and the management of them as well. And then Victor also touched on sector risk and country risk. So you've got multiple variables there. So one is around the underlying data source. Two is having the technology that enables a organization to reflect their risk-based approach within a platform or a system. And then you kind of need to look at, so then those different variables, reflecting those different variables to inform the risk rating. The other thing to mention is sometimes the complexity of these risk models, it becomes incredibly complex. So you have the ongoing maintenance and management and validating those models in terms of effectiveness that needs to be considered.
Yeah, a lot of interesting points by Victor, and I think also by Chris. The main point was kind of like the more different regulations and the countries that kind of you work with globally, a lot more complex it gets with each one. So this is definitely important to keep in mind. So we kind of go to customer checks and due diligence. So Chris, how do you strike a balance between the necessity of a robust customer due diligence for the product and ensuring a positive customer experience along with efficient onboarding process? So everything would be like really streamlined and easy. Mm-hmm.
Yeah, so I mean, this is a challenge I think most organizations face, right? At the end of the day, you have obligations, you have compliance obligations that you need to fulfill that, you can't compromise on. So that needs to be done. So I think from a vendor perspective, what we try to do and what we try and help organizations with is provide them with the capabilities so that they can bring everything together into one platform, that they can have different processes within that platform. So it has the flexibility to accommodate the different compliance processes an organization needs to kind of fulfill. The other key area is actually trying to make sure that data is available and accessible to the organization to actually help drive that process. So within LexisNexis Risk Solutions, we obviously have proprietary data assets that we provide to organizations. But within the proposition I'm focused on, we also have third-party providers as well, because we realize in various regions around the world, there is a need for specialist data sources, and we want to make that available to our customers. And so by providing that data, and that's an ongoing kind of initiative to make sure that we're continuously evolving the data that we can make available to customers, we can then open the door to actually automation. So for low risk customers, depending on the process, if we're just talking onboarding, if it's a low risk customer, if they pass all the checks, whether it's IDV or document authentication, AML screening, maybe some fraud checks as well, you would hope that you can, you pass us through all of that, you could open the account, right? Because the risk rating should be low. Importantly as well, the technology needs to have the audit trail. At the end of the day, this is serving a compliance purpose. So everything needs to be documented, whether it's done by a machine or whether it's done manually. That indelible audit trail is a key kind of foundation that needs to be within the technology. So providing that to customers as well is essential. So by automating for those low risk customers wherever possible, we are minimizing friction. We're driving efficiency for the compliance department. And our goal, like with lots of other providers, will be only to flag up those cases that actually do require the AML analyst to look at it and to do some investigation and maybe extra research to determine whether that risk is there.
Chris, maybe to have a discussion, I really like this platform solution that you have, but I have a question related. How hard is it to build up in the bank, which consists of 100 different banks? So it was built on 100 different banks and have a lot of different systems. How it is hard to build everything up or to implement in this platform?
So that's a good question. So I would say in terms of where this proposition is focused, I'll just be transparent, it's not typically at the big kind of multinational, the your scenario type of bank. It's kind of institutions that don't have that kind of complexity in terms of their tech stack and their legacy data stores. However, the way it would work is, one, the platform's kind of modular, so you could use it for discrete requirements that you maybe have. The second thing is I mean, there would have to be a significant assessment phase of your tech stack and where it could sit and how it dovetails with that. Understanding the data structures you have. I'm assuming the data quality will be very good, but it is around getting those inputs into the platform from your source systems to actually drive the process. And then we would figure out the process flow. What is that process flow that you're looking to achieve, and what data sources you require in order to drive it. So that at a high level, that's how we would work.
Okay.
So it would be probably a really individualistic approach for each bank, like kind of a separate thing in a way.
With Victor's scenario, when he says there's like 100 banks all bringing together, I'm immediately thinking there's probably a minimum of 100 processes, with each of the bank has their own process, and each of those sub banks will probably have multiple processes. So there's a ton of complexity there to do, and maybe there's already alignment work that's happening to align those processes, but there's a lot to think through just with Victor's example.
Yeah, absolutely. I mean, there is also correspondent banking, which is also a quite complex subject on its own. So yeah, absolutely. But Victor, what kind of particular challenges do you or just bank industry as a whole faces when doing customer due diligence, at least in your experience?
I would say that this is process automation. So the question is, how far can the financial institution go with enhanced due diligence automation or decreasing customer risk based on its transactional behavior? So let's have an example. Financial institution has onboarded high-risk customer and performed EDD before commencement of the business relationship. Inherent risks were mitigated, everything was fine, and residual ones were in line with the risk appetite, so the customer was accepted. Common practice is to perform EDD on a high-risk customer is 12 months, usually on the market, I mean the banks or financial institutions. And in Estonia, we also need to perform it 6 months after the onboarding of the high-risk customer. But nevertheless, not any new risks were identified during ongoing EDD process. So during this period of time, analyst has checked all the available internal and external databases, nothing new. So is it worth to somehow automate the process? How clever should be the system? But then how all of those databases should be implemented in the process, and how the, let's say, computer should make a decision on it if not any new risks were identified during the market period of time. So pretty similar examples we can put into the medium and low risk customers. So I believe this is the main challenge. How can we accelerate the process to make it more efficient and to automate those kind of customer due diligence processes?
Yeah,
so that's a tough example you use, because you used a high risk customer, right? So there was obviously red flags that you saw through the process, and it kicked out to one of your specialists, and they probably had to do quite a lot of desktop research, probably reference internal systems and other systems to maybe investigate that further. So where you're accessing third-party data sources, there's the potential of bringing that into a more efficient workflow to help with the investigation process. But on the other side, in terms of low risk, which is probably where, the majority of customers are going to be, right? The focus of a lot of vendors will be, how do we streamline and automate that as well as possible, while recognizing that anything that's going to be medium or high risk, you're always going to want human intervention to review that and to investigate it further to make sure that you're mitigating the risk to your organization.
Yeah, fair enough. So let's dive a bit even deeper into the risk scores. So Chris, since we mentioned already, let's say, adverse media screening and PEP screening as well, so how effective is, do you think, assigning the risk scores based on those? Do such risk scores have any legal basis behind them for doing some action afterwards? Because if you think about it, I mean, like not every PEP is laundering money, or as mentioned previously, not every adverse media flag is like really that bad in a way.
So the way I view it in terms of name screening is it provides one input into a risk scoring model. right? So it's actually looking at other factors to do with that individual business. In aggregate could mean that it triggers something that requires a referral and further investigation. So that's kind of how I view it, unless you take an obvious example like sanctions, right? So you've got a matching on sanctions, that's pretty obvious. That's going straight to referral and action needs to be taken. But in your example of a PEP, as you said, not all PEPs, you would hope not, are engaged in money laundering. So yes, but it would be an input into the risk score and potentially trigger an investigation, because the obvious question is, depending on the type of product they're trying to apply for, you may want to ask questions around the source of wealth, right? So there's obvious things that you may want to trigger there. So it's a key input, but I don't think it's the sole determinant of risk scoring kind of methodology.
Mm-hmm.
On your
Okay.
question on the legal basis, I don't know if I'm best to answer that, but to me, I think from a legal perspective, it's more to do with the outcome. It's all to do with the prevention of dealing with someone that's potentially sanctioned, and obviously mitigating, looking out for predicate offences and taking mitigating actions where appropriate. So I think it's more to do with the outcome as opposed to whether the risk score itself has a legal basis.
Mm-hmm. No, it's completely fair enough, and probably Victor can also add something on top of it in a way that do actually like cumulative risk scores exist in banking field. So basically, when you take a lot of different metrics and kind of add them to one, and probably what other means do you also use to do that? I mean, besides, let's say, PEP screening and adverse media, and maybe some of the more, like, let's say, popular ones.
Yeah, here I have to agree with Chris that all of the hits or matches that are coming up into the system should be investigated furthermore by the analyst. When we are talking about PEP and sanctions list, then in my opinion, it's more obvious as the analyst should check the alert and conclude, was it a positive match or just a false positive? And how it usually works, in case of positive PEP or sanction match, financial institution start an investigation. So it's pretty similar to EDD process. If the PEP background is clear and not any corruption risk identified, it is more than likely that the financial institution continues business relations with the increased scoring of the particular PEP customer. But if it concerns sanctions, then evasion is a clear case to terminate the business relationship. And if circumvention, then there is a need to have a clear evidence that the circumvention occurred to terminate the relations. And I think in those situations, there is not a clear reason why we need to change the score of the customer, as we are assessing it more about the continuation of the relations. And with adverse media, again, I like this example. It's a hot topic now. It is much more broader, and cumulative risk scores could be a good option to assess customers' behavior. But there is still a lot of concerns, so questions that we have in the local market, and that could be resolved and answered. So the first of all, type of the crime, which is described in the article. Is it about money laundering, terrorism financing, tax evasion, drug dealing, etc.? Is the article about the customer and its behavior, or the customer was just mentioned in the article? So this is also like pretty different risks that could be posed by the customer to the financial institution.
Mm-hmm.
The third one is how frequently the customer is mentioned in adverse media. So let's say, is it like once per month, once per year, or more seldom? And is it the same crime, but just described several times in different newspapers? Or each month it is something new?
Mm-hmm.
I can mention a lot of more scenarios, but those are like the main questions that our market participants have, I mean, amongst the financial institutions.
No, that makes total clear sense. I mean, how frequent is the person appearing in, let's say, adverse media, and also it a lot helps to understand their transaction behavior and just in general understand their behavior on your platform or bank or whatever. But also, Victor, it's an interesting question from a vendor perspective. So, what are the parameters on the basis of which compliance heads at financial institutions, or let's say CEO, evaluate AML watchlist screening tool or a product, basically. Let's say LexisNexis one, for example, or just in general, any.
Yeah. So I'll make a few comments on Victor's thing around adverse media first, just because
Yeah,
you
go
mentioned
ahead,
it's a
go ahead.
hot topic. So I think it goes back to the point of having a curated data set, right, that is actually looking at the predicate offences. Because if you're just going across, just doing an unstructured adverse media search, you will get lots of articles back, and some of them would be allegations and various other things. You have to sift through it. So actually having a research team that is looking across all those media articles in the different languages and put them into structured profiles, I think is beneficial. They typically would need to look for credible and reliable sources as well. So they're looking for multiple occurrences of that kind of article. And the second thing as well, because it's structured, they'll be categorizing the type of predicate offense, which can actually make it easier for you to kind of look at that in terms of the risk and assess the risk. So there's a couple of points there just on adverse media. In terms of your question around the parameters, I mean, yes, false positive reduction is obviously always a hot topic, whenever you're talking about name screening and various other things. The interface is important, usability is important as well. Although the area that I'm working on is kind of more of an end-to-end kind of platform. So for me, the name screening is one component. So what my conversations will be is around that end-to-end process. And for me, it's kind of like, okay, so how are you providing that data in when a individual wants to open an account, for instance, at your institution? How will you provide that data into the platform? What level of data is there? What checks can we do there straight away? Because we could look at things like point of application fraud, right? We're looking at the application history that we've seen across the platform, and we may say, well, actually, there's this other application from a different individual using the same email address. That may be a red flag. So we will actually go step by step and look at the process that you're trying to do and the outcomes you're trying to achieve. And we will try and map that in accordance with what we provide within our technology and capabilities, and what data sources will underpin that as well. One of the benefits of doing that when you're looking end to end, so if we look broader than name screening, is you do start to get more of a holistic view of risk, because we're looking at all the different touch points, and we have transaction monitoring as well. So it's not just about the onboarding point, it's also the ongoing behavior of that individual, which is really reflective of how they're transacting, right? Because you're going to have a view at the onboarding process. This is how that individual I would expect to operate. And you may have certain rules set up based on their risk profile. And then the reality could be different, and you want to be notified of that. So there's other considerations there. So I'm not really answering your questions around parameters, but I'm just saying kind of the conversations I have is more along those lines. It's kind of more to do with end-to-end processes and how potentially we can work together.
But Victor, could you add something on top of it in a way that what our banking industry particularly is looking usually in verification products?
In verification products, so this, I would say maybe as a whole, not only verification, but all the products. So these main parameters are efficiency, flexibility, so let's say overall quality, and the price, of course. And AML is the field where the pressure on resources is always stable. And if you have a lot of false positive, which Chris also touched upon it, where the pressure on resources, or where it is like without possibility to put a screening tool, learn from it, and whitelist this type of alerts, you will require even more resources to deal with the task and to prevent the backlog situation which could occur. On the other hand, who from the employees will have to investigate, so let's say 99% of false positive, how they will be motivated to do this task, and what will be their motivation, how high will be the risk that the real hit will be just missed from this amount of alerts. And let's get back to whitelisting. So real life situation, employee of financial institution, so at the same time financial institution is the employer of this employee, has the name match with the sanction list, and his salary payment coming from the same financial institution is getting stuck in the filters due to this match. the tool that the financial institution is using is not flexible, and the
Mhm.
salary payment for this employee could not be whitelisted, and
Mhm.
it's just stuck. In average, it takes, so let's say, 2 days to rule out this payment. As a result, one employee from all the hours is getting payment 2 days later. And what do you think about motivation of this employee, and especially when he or she is working for AML? And what do you think about resources which are invested in this process by the company just to resolve this small thing? I mean, paying the salary to its own employee. But
Mhm.
nowadays, machine learning and AI can make screening and monitoring process more cost effective. But I think all of these kind of solutions could be implemented only then when in-house know-how of the process is on the top level and
Mhm.
the organization knows about its needs. So just to implement AI and or machine learning for implementation is not the goal itself. It's even better to upgrade the existing system
Mhm.
and probably to buy some additional features for the Finnish institutional needs. Then you just need to think something and to implement something for implementation. It's not the best solution in my opinion.
Mhm. We will cover a bit more the automation and the quality basis in a moment. But Chris, what, in your opinion, are the shortcomings of existing AML watchlist screening tools or similar programs,
Yeah.
products? Mhm.
So I suppose my first point on this is a lot of them kind of sit in isolation from other parts of the process. So they're like a discrete piece of technology that are there doing one kind of function. And what we see is the kind of the benefits of stitching capabilities together. Obviously, I'm going to say this because I'm focused on platforms within a platform, because then you get the benefits of seeing multiple checks done on an individual within one system, right into one audit trail, one case management system, and the ability to have a holistic risk score. So what we generally see is a lot of organizations may implement a name screening, but they have to integrate it into their tech stack. They're doing multiple integrations with various things like identity verification or doc auth providers, name screening, various other things. So a lot of organizations, they have the maintenance headache of the tech stack, maintaining those integrations, doing the upgrades, and then they're still having to stitch it together in some kind of decision engine to actually figure out what that risk score would be across that whole process. So there's complexity when you look at name screening in isolation rather than looking at it as part of a holistic suite of capabilities to drive a process and an outcome. Sorry, you're on mute, Ilma, if you.
Sorry. Yeah, okay. Fair enough. Thank you for your answer. So, Victor, do you have anything else to add on top of maybe potential shortcomings of the current programs and
Not
products?
really, yeah, because I also believe that you can not be just in the silos, that
Mhm.
all the systems and processes should work together, that you can resolve all the challenges more efficiently.
Mm-hmm, mm-hmm. I mean, there are also some money laundries techniques or trends, let's say like money mules or smurfing, where a lot of the products or rule-based money laundering tools are kind of like less effective. So probably it's more about transaction monitoring. But in your opinion, like how useful are those kind of money laundering anti-money laundering tools for like such cases where it's kind of hard to really set the risk score? Yeah.
Yeah, I like this example about money mules, and it
Mm-hmm.
is also a hot topic here in the Baltics. And probably I can also tell a bit more about it. So, what kind of trends do we have here?
Mm-hmm.
On the job portals and freelance pages, people can find job advertisements which are related to transactions or payment brokerage positions. So people just apply there for the job, and afterwards they are asked to open an account digitally in one of the local financial institutions.
Mm-hmm.
Their task is to forward the money, which will come from the specified account or the name, usually foreign country, to another abroad account. and from each forwarded payment they have or they take previously agreed interest rate. When financial institutions starting to ask questions about their transactional activity, there will be no answer or something weird. So let's say, let's take last examples, like parents are collecting money to his or her, the customer account for upcoming trip with kids to somewhere, or relative asked to make a transfer for class reunion party or something similar. But what's the problem here? It concerns not only rule-based tools, but also risk-based. First of all, the customer from its very beginning has the international payment behavior, like many incoming and one outgoing payment, or vice versa. Secondly, usually this kind of behavior is short-term. So in a couple of months, customer will just disappear and probably opens an account in another financial institution. So, and here this rule-based approach, in my opinion, will work better. But if we cannot have here any thresholds, as those sums are usually small, and we will have a dilemma. A lot of usual customers could have this kind of behavior, and they will be also alerted. Of course, we can limit it with one additional indicators. So new customer and specify, so let's say new customer for 3 months. But if in addition they will start to have a usual local transaction, then the rule-based approach will not just be working. So we still need to use the risk-based approach. And I think that financial institutions should have those tools which are flexible and which could be also, or which will have an option for whitelisting. And as I previously told, machine learning and AI are those functionalities that will be the future in IML.
Could it be that better communication between banks could also help in such cases? Because you mentioned that, let's say, a person is really short term, like doing any transaction with your bank and then just going to another one. So,
Sure. And between the market participants, we have a tool which were implemented by another system provider, and we are communicating with other banks on daily basis. So if we see that it is a fraud case, we just write them about it, and we will have an answer just in an hour, and everything or all the accounts will be blocked from two sides, from our bank, and our bank will also block.
Okay, good to know. So from here, since it was already mentioned a few times, Chris, how does automation contribute to streamlining risk assessment process and, let's say, alleviating compliance burdens for products?
Yeah, so I think it goes back to some of the points I said earlier, right? So in order to kind of streamline the risk assessment process, being able to actually come up with a holistic risk score based on all the checks that you're doing, I think is key. Having technology that supports that, your risk rating model, so that it can dynamically update as you do those checks to give you that score, and also having the transaction monitoring capability as well. So it's not just about when you're onboarding the customer, but also when they're transacting, how that impacts the kind of the risk score as well. I was going to touch on Victor's example, which is again, he always likes to, he throws complex examples out, but I think they're good. So yes, I think it all comes down to, from my perspective, it's kind of really understanding the typologies, but I also think we need to take a broader view as an industry, right? Which is, it could also be in terms of money mule detection. It could be looking at their digital behavior. It could be looking at how different digital personas are interacting with each other. So in money mules, you generally have someone like a mule herder, and then you will have the victim. Sometimes the victim is knowingly engaged in that because they want to make quick money. So I know in the UK, a lot of university students, they get duped into these kind of money mule schemes and they don't realize the consequences. And others are more nefarious. They're actually involved in organized crime, right? So they are an active participant in the scheme. They know know what they're doing. So there's different typologies around all of that, and actually looking at the digital behavior as well as having your transaction monitoring rules-based system can help. It's not a complete answer because typologies are evolving all the time, right? So it's not going to catch everything, but I think it is a combination of things, and maybe in that type of area it is actually looking broader than just AML, but also looking at kind of digital identity and some of the kind of the fraud systems that are out there as well.
So how does automation then come to play in this? So you saying that probably it's better than to give AI more freedom to kind of detect suspicious behavior rather than for people or specialists to do it in a way?
So if we touch on automation, automation for me is really around that efficiency play. So it is around where possible to use automation. It isn't a default option for everything, right? So as we've already discussed, there's always things that are going to require investigation and require expert opinion to review and look into. But where possible is to use automation to streamline the processes as much as possible so that for your low risk customers, you're reducing friction and you're onboarding them quickly, which I know a lot of organizations are concerned about. But it's also important with automation that it is kicking out those cases that you do need to look at and you need to investigate and do further research on. So that to me is the role of automation. To me, it's more around efficiency, and it's also dynamically updating that risk score as you go through the process as well, which is written to the audit trail.
And also adding on top of it, how does then data quality or availability affect both and impact both automation and effectiveness of any risk assessment processes?
Yeah, so to me, it's critical, right? So if without that, it's really hard to do any automation. So if the data quality is poor, then you really, you're going to struggle to automate. And also having the right coverage is also critical as well, right? Because you're trying to automate various processes, do checks against various data sources in order to drive through that process. So having the coverage and having access to good quality data sets is imperative and really to achieve the automation that organizations want.
Okay, good. So, Victor, how can banking and overall financial institutions maintain agility and adaptability to respond to evolving regulation changes, new fraud methods, and money laundering trends, and basically to challenge emerging risks more efficiently?
Yeah, okay. So to maintain ability and the ability to respond to evolving regulatory expectations and emerging risks more efficiently, financial institutions should increase, first of all, knowledge of their employees in particular topics and trends. So I believe this is the starting point. Of course, the second one, as Chris also told, and I fully agree, is the data that the financial institution has. You cannot start to automate the process if the process itself is not improved and the data is poor. So I suggest to start from the simple things which are described. So let's say at the or in Lean Six Sigma approach, so where you just eliminate all the redundant things from the process and the flow is simplified. And from this point, you can start to think about further automation of the process. All the regulatory, and if we are talking about the regulatory changes, they should be monitored, in my opinion, at least on monthly basis and respectively reported to the management of the financial institution. But good practice in the Baltics is to discuss and comment all the upcoming regulatory changes on the financial institution market participant level. So we usually address all the concerns to the regulator and seek for more precise description of their expectations.
Okay, good. And then, Chris, what is your vision of the future of risk assessment and AML compliance contexts for kind of like vendors, products, and AML watch list software?
So you asked for the vision. So utopian view would be complete access to all relevant data sources globally so that I can meet any customer's demand irrespective of region. That will be kind of number one. Having the ability to, so then that would drive the automation, which we just touched on. I also think there are uses of AI that needs to be considered, and I would expect to see that become more and more prominent as we go through in terms of technology stacks that vendors are providing. So this could be in terms of the risk rating. It could be, you could be using AI potentially to try and scour and understand what regulatory updates are there. Maybe it provides a prompt to an organization and say, actually, this regulation has occurred. It's not updating the risk rating methodology, because I think that would be bad from a compliance perspective personally, but I would prompt the actual compliance department to maybe they need to look at this. So if we could do something more proactive in that area, I think that would be interesting. And then I think as well, it could also look at whether the risk rating model is optimized, right? So it could try and do some type of model validation on it. To what degree, I'm unsure of, but you did ask for vision. So vision would be using AI and machine learning more effectively, as well as having access to more data sources to drive automation and efficiency.
Okay, that's a good vision indeed. Probably current GDPR standards wouldn't be so aligned with, let's say, so much open information in a way. But I agree with you. This would definitely put money laundering at risk for sure, which would be good. So I think we're quite up to the time. So probably we should be concluding. Thank you, Chris and Victor, for sharing your insight on screening specifics and risk assessment. I hope you both have enjoyed the discussion, and I sincerely look forward in continuing our further collaborations, maybe even webinars in the future. So do you have any kind of final things to say or share before we kind of end the session?
Nothing from my side. I think it's been a good interactive discussion, and I liked Victor's examples, which he didn't tell me about before the call. So they were very good.
What about you, Victor?
Yeah, I have short conclusion. So I totally agree that the financial institution should invest in the new systems to be more efficient, to be more compliant with the local and global regulations. But from the internal perspective, we need to invest in our people, that in the end, the expert will be the person who will be deciding on further cooperation with the customer, or to onboard the customer, not the AI itself or the machine learning. So yeah, this is the future, and I also want to thank you, Ilmar and Chris, for this great discussion. Yeah, thank you very much.
Yeah.
Thank you.
I agree with you on that point. So we also hope this comprehensive discussion helps our audience to navigate the challenges and opportunities in AML compliance more effectively. And we would appreciate if you leave some feedback in the comment section. And as always, thank you, everybody, and we'll see you on our next webinar. Have a great evening. Okay, bye-bye.
Thanks, everyone.
Bye.